Introducing River Modern, a prestigious new condominium by Land, set to redefine contemporary urban living in River Valley within the highly coveted District 9. Now, let's dive in together to get crystal clear, unbiased insights on River Modern.
Hi everyone, I'm Sandra Lee. Today I'm going to walk you through River Modern, one of the most anticipated upcoming launches in the core central region located in District 9. If you are currently planning a major property decision, whether you are upgrading from an HDB, repositioning from a RCR condo into the CCR, or evaluating a long-term investment, this video is designed to give you clarity, structure, and confidence. In this video, I will cover a full project overview including the unit mix and site characteristics, why developers were aggressive on this GLS site, a data-backed breakdown debunking the oversupply myth, why buyers are still coming in strong, a clear HDB upgrade timeline explained step by step, and finally, the strength, trade-off, pricing outlook, and launch timeline. If you find this kind of honest data-driven analysis helpful, please like and share this video. Let's begin. The first section will be covering the project overview and unit mix. River Modern is a 99-year leasehold development by Land, located along River Valley Green in District 9. This project comprises 455 residential units across two 36-story towers. One very important point to highlight immediately is the unit mix. River Modern consists only of 2, 3, and 4 bedroom units. There are no 1-bedroom units. Well, this is a deliberate positioning decision, as developments dominated by smaller units often experience higher investor churn, weaker long-term PSF support, and more volatile resale behavior. So by focusing on family-size layouts, River Modern establishes a more stable owner-occupier profile, which historically supports healthier price performance over time.
If we look at the core central region, especially areas like River Valley, most developments tend to cater to two very different buyer profiles. On one end, you have larger, ultra-luxurious homes with big floor plates and high absolute prices. On the other, you see very compact units like 1-bedroom studios or small 2-bedrooms, which are often designed to appeal mainly to investors. Because of this, District 9 can sometimes feel a little polarized, either very big or very small, with not much in between. Personally, I feel the developer is taking a very wise and intentional steps with River Modern by shifting the focus towards more livable homes, starting from the 2-bedroom layouts. These are not designed just to look good on the brochure, but to actually support day-to-day living. So when we look at the entry quantum and internal sizes, they feel more balanced and realistic, especially for home upgraders who want to move into the core central region without overstretching themselves. That is why I see River Modern resonating strongly with families and owner-occupiers, buyers who are not just thinking about numbers, but about long-term stay, livability, and lifestyle in River Valley. And in a district where supply is often skewed towards either extremes, projects that offer this kind of middle ground tend to stand out over time.
And in the next section, we'll be covering the GLS tender, land cost, and site characteristics. This site was highly contested, attracting 5 bidders, which is one of the highest participation levels among recent GLS tenders. Land secured the site for approximately 627.8 million, translating to about 1,420 per square foot per plot ratio. And this land price signals strong developer confidence in the River Valley location. So River Modern sits on the meandering band of the Singapore River, giving it a very rare land configuration. Because of this elongated river frontage, approximately 70% of units enjoy unblocked river views. River-facing stacks are not limited to just a few premium lines. In addition, Kim Sing Park sits seamlessly adjacent to the site, integrating greenery and open space into the living environment. So this combination of riverband, park adjacency, and integration is extremely difficult to replicate. In the next session, we'll be covering the connectivity, MRT Mall, and TEL advantage. River Modern offers direct sheltered access to Great World MRT on the Thomson East Coast Line. But this is not just near MRT, it's true integration. So from your residential lobby, you can reach the MRT entrance in under 1 minute, fully sheltered. There is also a direct underground link to Great World City Mall, offering immediate access to dining, groceries, and daily conveniences. The Thomson East Coast Line is particularly important because it is the only MRT line cutting through Orchard and River Valley in decades, introduced into an already mature CCR environment. So infrastructure of this nature tends to be priced in gradually over time. Next, we'll cover CCR transformation and value gap opportunity. While Singapore continues decentralizing into regional centres, the CCR is undergoing its own renewal cycle. Across Orchard, River Valley, Newton and Novena, we are seeing hotel redevelopments, refreshed commercial and lifestyle nodes, improved streetscapes, and GLS sites setting higher land benchmarks. Historically, CCR properties trade at 10 to 20% premium over RCR, but in recent years, this gap compromised. And when this happened, the CCR has historically rebounded faster once the confidence returns.
Let's take a look at the nearby GLS sites that were recently bidded and what they tell us. In the prime core central region, Newton in District 11 was bidded at about 1820 PSF per plot ratio. Holland Link in District 10 and Danyan Road, also in District 11, both came in at above 1,400 PSF per plot ratio. At these land cost levels, developers are naturally pushed towards either higher pricing or smaller unit sizes. Now, if we move further out, OCR sites like Bedok Rise were bidded at around 1,330 per square foot per plot ratio. Lower entry, but serving a very different buyer and tenant profile. And this is exactly where River Modern comes in. Located in District 9, River Valley, River Modern sits right in the sweet spot, bridging affordability and prestige, while still offering livable homes designed for real stay, not just investment math.
River Modern enters the market at a time when this historical relationship is temporarily misaligned. Next, we'll move on to the resale price benchmarks. Nearby resale benchmarks show strong price acceptance. Let's look at Martin Modern. 3-bedroom resale up to 4.44 million, which is about $3,125 per square foot. Irwell Hill Residences, a 2-bedroom around 3,300 PSF. River Green, a 2-bedroom plus study at about 3,591 PSF. And this all confirms buyers are already comfortable paying above $3,000 per square foot in River Valley. Now let's look at rental performance. Rental demand in River Valley remains strong. For 3-bedroom units, the Avenue up to $17,750. Martin Modern up to $13,800. For 2-bedroom units, Irwell Hill Residences up to $7,000. Martin Modern up to $8,500. The Avenue up to $8,800. This, again, it provides strong downside support. Next, we'll move on to why some buyers may hesitate. Concerns often raised include perceived oversupply, higher CCR pricing, no 1-bedroom units, and a more vibrant environment due to MRT and more integration. So these are valid concerns, and this is exactly where data matters. Now let's debunk the myth of oversupply. Let's put opinions aside and look at the numbers. The surrounding sub-planning areas of Tiong Bahru, Tiong Bahru Station and Bukit Ho Swee have a combined population of about 42,400 residents. Using SingStats average household size of 3.09, this translates to a need of roughly 13,700 homes. However, the current housing stock in these areas totals about 12,210 homes, of which 10,340 are HDB units. That already represents a shortfall of around 1,500 homes. Now let's layer in upgrader demand. If we assume a conservative 10% of HDB owners upgrade, that's another 1,034 households. And that brings the total demand gap to about 2,546 homes. And now let's compare this to new supply. Recent and upcoming projects include Zion Grand, 706 units, 86% sold. Prominent Peak, 596 units, 66% sold. River Green, 524 units, about 92% sold. River Modern, 455 units. So that is 2,281 units in total, and many are already largely sold. Even without accounting for buyers from other districts, this supply does not fully meet demand. And in reality, buyers in River Valley comes from District 1 through 28, not just nearby HDB estates. For perspective, true oversupplies look like areas such as Tampines, where over 5,700 private units were injected, not counting HDB. River Valley is nowhere near that scale. So looking ahead, apart from land parcel C, there are very few remaining residential plots. Recent GLS bids such as Newton at around 1890 PSF per plot ratio suggest future launches will be priced higher, reinforcing that River Valley is a scarcity story, not an oversupply one. Now let's see why some buyers will still buy River Modern. Well, River Modern, it benefits strongly from river-facing premium. When Martin Place Residences was launched, its pricing was about 15% higher than Rivergate's resale pricing at that time. And over the same holding period, Rivergate's average PSF is now almost 10% higher. So owners achieved almost double the profit, where River Modern mirrors this advantage with about 70% river-facing units, a rare river band configuration, and potentially the last major river-facing residential in River Valley. So I think this type of scarcity cannot be replicated.
Projects with direct MRT access and an integrated mall consistently see over 80% sold on launch day. Let's look at recent examples. Parktown Residences by UOL and Capital Land, 1,041 units sold on launch day. Average price achieved around 2,360 per square foot. Sky at Holland by UOL Capital Land JV, 99% sold on booking day. A total of 658 units at an average of 2,953 per square foot. Zion Grand, 590 units sold, 84% taken up on booking day. So these numbers are not coincidental. They reflect proven demand for homes that combine connectivity, convenience, and lifestyle all in one place.
Now let's move on to some important information on HDB upgrade, the timeline, ABSD, and cash flow. Now for those upgrading from an HDB, this part is critical. Once your buyer exercises the HDB option, an exercise fee of up to $4,000 is paid. After that, there's an important planning window known as the days to submission of the resale application. And in most cases, I would recommend aiming for around 60 days. This period is used to secure the option for your new private property and align financing. And after submission, HDB will take about 28 days to grant acceptance. Following acceptance, completion usually happens about 8 weeks later. Now, here's the key legal point. If you buy your private property before selling your HDB, you're considered a second property owner, which means ABSD has to be paid upfront. ABSD can be refunded if the HDB sale is completed and the remission application is submitted within 6 months of the private purchase date. Now let's talk about cash. For a private purchase, the minimum upfront cash is 5%. 1% on option, 4% on exercise. For a $2 million property, that's $100,000 in cash. Stamp duty of approximately $69,600 must also be paid in cash first within 2 weeks of exercising the option. So realistically, you're looking at around $170,000 cash upfront excluding ABSD. If this feels tight, there are structuring options. Some buyers negotiate a 3-month extension stay on their HDB sale to allow CPF and cash proceeds to be released. If that is not possible, a bridging loan can temporarily fund the gap. Interest is a bit higher, typically around 4.25% per annum, but it's prorated for a short period. The key takeaway is that there is no perfect timeline. Systematic planning is what makes the upgrade smooth. Next, we move on to analytical strength, trade-off, and pricing. At this point, let's step back and look at River Modern holistically. One major strength is that around 70% of the units are river-facing, made possible by the elongated land shape. The family-size unit mix supports PSF stability while surrounding resale and rental benchmarks are already strong. The 99-year leasehold positioning aligns with current CCR planning trends, and future land parcels are likely to enter at higher costs, supporting resale pricing. Now the trade-off. The upfront cash outlay is higher, the upgrade timeline is more complex, and this is a project that requires a long-term mindset, not short-term flipping. In terms of pricing, a 3-bedroom unit is expected to start from around 2 million. River Valley historical 3.45 average profitability for 3-bedders reinforces pricing stability over time. And for those tracking viewing opportunities, the tentative preview date is 20th February 2026, which falls on Chinese New Year Day 4. The tentative launch date is scheduled for 7th of March 2026. These dates are subject to final confirmation but provide a useful planning window. To conclude, I hope this detailed walkthrough has given you clarity not just on River Modern as a development, but also on the planning required for a successful upgrade. If you found this analysis helpful, please subscribe to the channel for more data-driven property insights. Thank you for watching, and I will see you in the next video.